Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 7th, 2010. Now our first position for tonight is going to be in the S&P 500. We are going to be looking to buy this, but what I want to point out here first and foremost, we have this triple EMA cross that's gone off, but we have a wide gap here between the predicted 3-day and predicted 8-day moving average from vantage point. So with that said, we're looking for a pullback here. Now another point of concern is you can see that this channel I have drawn here at this 1225 area. So that's a bit of a concern for me also. So I'm expecting a pullback. What we want to do now is determine where that pullback is going to be. We can see here that our predicted MACD has crossed the trigger above the zero line. Predicted true strength indicator has also crossed the trigger, both indicating a bigger move to the upside. Now again, looking at our short-term crossover, everything there is still pointing higher. Now again, you can see how this short-term crossover is turning flat right underneath this channel top that I have drawn. That is definitely a concern, but again, that's a short-term indicator. Our medium-term indicator is still pointing upward, as is our long-term indicator, as you can see right here, and the triple EMA of course is also looking good. So what we want to do here now is we want to identify some key levels where we can get into another long position. So I'm going to bring up the triple EMA cross just so we can clearly identify our support levels. Now our major support level comes in at 1198.60. We then have 1205.90 and 1217. We've closed at 1222. So I'm going to be looking for a pullback on the S&P 500 futures. Whichever month you're looking at, you can make the adjustments to that. But essentially, I see a lot around the 1009, 1010 area is where I would like to see that pullback. So I'm going to go into the daily report from Vantage Point now and see if I can narrow down that entry. So for tomorrow we have the predicted low at 1209, the high at 1227.80. So again, we're going to be looking for a buy position as close to this area as we can get. Now the one area that is another that could potentially be a problem is this 1217 area right here, this 3-day predicted moving average, which can act as a pivot point to get into a buy position. Now I think because we've got a big move that's happened over the last few days, we're starting to flatten out a little bit on that short-term indicator. We should see a pullback somewhere between the 1210 and 1205 area, at which time we'll be waiting there for it to get into those long positions. And then we're going to be looking for this trend to continue onward towards up and above, hopefully, the 1230, 1240 area. That's what we would like to see. Now there's a number of other indicators here that suggest to me that we're starting to get a base here and we should move higher. The only one that's a bit of a concern for me right now is the correlation to the US dollar index. Now looking at the US dollar index, again, we're not quite getting that sell signal here from Vantage Point. It's under pressure, but you can see this is the candle that came down after the non-farm payroll number on Friday, which clearly was a bad number. And I'm just going to highlight this so everybody can see this. Now this candlestick from today, you can see we've had a higher low. We haven't had a higher high, but I'm not so much concerned about the top side on the dollar index as I am on the downside. This is telling me we do have some support here at this 79.45 area. You can see very sneaky, it closed at 79.59, which is above the 18-day predicted moving average. So we do not have a confirmed sell signal. If the dollar starts to really rally, we could see those equities come under pressure. So that is a bit of a concern for me. And again, also a concern on this dollar index for me is that we're running flat along the trigger on the predicted MACD and the predicted true strength indicator, but they haven't quite crossed. This tells me we could just be working off a bit of an overbought signal, because you can see that basically the dollar's been on a real tear for the last full month. We've had these little dips up and down, but it's been pretty much a straight run up on the dollar from the 76 level all the way up into the 81.50, 81.70 area. So just a little bit of a concern I want to point out on the two recommended trades tonight is what's going on with this dollar index. Now our second position, we're going to go back into the US CAD. This pair here, again, we've been playing this range between 99.76 and this 102.50, 102.60 area. The triple EMA cross after several weeks has now completed and moved to the downside. We are going to be looking to short this, but I want to point out this is a volatile trade and it is highly correlated to the S&P 500 trade. You would never take both of these trades at the same time. Your equity traders would look at the S&P 500. Currency guys, you're going to be looking at the dollar CAD, but you don't want to mix these trades because they're extremely correlated. Just to point that out. Now, looking at this, we've got a critical level 101.29, 101.08, and 1.0063. So what we're going to be doing is looking for a test somewhere up between this 8-day and 18-day predicted moving average, where we can use that to set our shorts. Now, we've crossed the trigger here on the predicted MACD. The predicted true strength indicator has crossed just below the zero line. This is a fairly powerful indication here that this thing is at the very least going to come down and test this 99.76 level. We've got crude oil pushing higher. We can see that the crude oil, it broke through our key level at that 86 level. It's pushed higher, so we missed the call on that one. It's broke higher. This has dragged the US Canadian pair right down with it. So crude oil is a little bit overbought, but it's holding its gains, so I want to point that out. Now for tomorrow, what we're going to do is we're going to go into the predicted highs and predicted lows from Vantage Point and see if we can nail down as close as we can on the entry to those predicted moving averages to limit our risk. So for tomorrow, we've got 1.0094 and 99.98. Neural index is still down. Our trend here is still showing quite strong, and this is really the predicted short, medium, and long-term differences play a big part in judging this trade. So all three of these are in agreement, none of which are oversold, and they're all at trend ready levels. This tells me we could be getting ready for a big move on that US CAD pair to the downside. Now stops in theory should be over that 102.50 level, and that's kind of a wide stop, but this intraday nonsense going back and forth is really becoming tiresome. You want to take a side one way or the other. If we get stopped, we get stopped, but we do want to try and stay with the primary trend here, and clearly it is down. So tomorrow we're going to be looking at the 1.008085 level to get into the shorts, and then we will be looking for a break of potentially a break of parity tomorrow. But again, my analysis on that US dollar index also remains a concern for this pair. We've been in this range for we haven't been able to get above this 102.50, 102.60 area for essentially the entire, it's probably the last time we were above this level was back in the end of October. So it's been quite a while. So, you know, something has to give on this pair, and there's certainly a downside bias, but you want to keep an eye on that dollar index tomorrow also. So those are the market positions for December the 7th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.